Alright, what's up guys? We're back with another video, and today I wanted to talk a little bit about what you do if your investments are down and what you do if they're up. So I mentioned this a little bit before, but if the stocks you bought are down, then, well, first of all, it's a good thing that you didn't put all your money in right away, right? So you've hopefully only put, I don't know, 15% in, 20%, something like that, somewhere around there. And so if that stock then is down, or those two stocks or whatever you have, if they're down, then you just buy more. So then you put in maybe 20% more, maybe 30% more. And your average price per share will then keep going down, which is, that's never a bad thing. You want to keep in mind that the only time you actually lose something here is when, oh, goodness me. The only time you actually lose something is when you sell and it's down from when you bought. So as long as you, I don't know what I'm shooting at there. But yeah, as long as okay. Oh my goodness me. Oh, I don't know how that works. Okay. So as long as you've made a good decision, you know, like you've done a lot of research and long term this stock will do well, then you have nothing to fear. You just need to hold on to the stock. And don't sell it when it's down. Just buy more. I mean, also, worst case, if you do sell it when it's gone down a little bit, you could also deduct some money from your taxes, which is also a good thing. Oh, what's happening? So, on the other hand, oh. What's happening? Sorry. So, on the other hand, if your stocks are up, it's kind of a difficult thing to sell when you're up, because, you know, you're probably going to keep thinking that like, oh, it's up, and, you know, it'll keep going up, and like, why would I sell it now? Well, there's a couple reasons why you would want to sell, and one of them is obviously you're up, so you've made money, so you have to kind of capitalize on that and get some profit, right? Because similarly, since you haven't lost anything until you sold it, in the same way you haven't made anything until you sold it, if that makes sense. Oh. Yeah, so that's kind of important to keep in mind. And then, you know, if your stock's doing really well, what you could do, so what you could do if your stock is doing super, super well is, so you've kept investing in it, and yeah, say it's doubled. So at that point, you can sell half of the shares, right? Because then, so say, I don't know, say you started with like 10 grand or something, or a grand. Say you started with $1,000 and you've doubled it, so now you have $2,000. Well, now you sell half of the shares and you're left with $1,000 profit, but you also have $1,000 still invested in that stock. And then, of course, you could reinvest that $1,000 that you just took out. Yeah, so that's a pretty, like, I guess a typical strategy that a lot of people have. I guess a lot of people try to do that, you know, but it's hard to sit and wait until it's doubled in value. So I would also say that in general, you shouldn't be scared of taking a profit. Like if you made money off of a stock, say it's up 10% or whatever. I mean, there's no right answer to when you should sell. I would just say that you would want to sell with a profit for sure. But yeah, I mean, if some things have changed with the company since you bought this, oh goodness me. If something's fundamentally changed with the stock or the company since you bought it, then, you know, you might want to reevaluate, but, yeah. So basically, you want to sell. Nice. You want to sell with a profit, and you want to keep investing the money that you earn from it. And yeah, there's more stuff I could add to this, so if you want more videos like this, subscribe to my channel, and I'll give you more content. So, all right, thanks.